Let me tell you something that might shock you. Right now, as I'm recording this, there are people sitting on thousands of dollars worth of physical gold who genuinely believe they're stuck with it. They think that when the time comes to sell, they'll be at the mercy of some shady pawn shop offering them pennies on the dollar. They've convinced themselves that owning physical gold is like owning a boat. You know, the old joke about the two best days being the day you buy it and the day you sell it. Except here's the thing. They're completely, utterly, catastrophically wrong. And I'm going to prove it to you right now. Because what I'm about to show you isn't just going to change how you think about selling gold. It's going to change whether you even want to sell it in the first place. But first, we need to understand where this myth came from. Because it didn't just appear out of nowhere. Think back to the 1970s and 80s. Your grandfather walks into a jewelry store with his gold watch, maybe some old coins he inherited. The guy behind the counter squints at it, weighs it on a scale that's probably rigged, and offers him maybe 60% of spot price if he's lucky. Your grandfather walks out feeling like he just got robbed, and he tells everyone he knows, "Don't buy gold. You can't sell it." That story gets passed down through generations like some kind of financial folklore. And here we are in 2025, with people still believing it. But here's what changed. Everything. The entire infrastructure around precious metals has been completely revolutionized in the last 15 years, and most people have no idea. We're not talking about minor improvements. We're talking about a complete transformation of how physical gold moves through the market. And the people who understand this, the ones who figured out the new system, they're not just buying gold. They're treating it like a liquid asset that they can move in and out of faster than most stocks. Let me paint you a picture of what the market looks like right now. There are over 10,000 dealers in the United States alone who are actively buying physical gold every single day. Not selling, buying. They're competing with each other for your metal. Think about what that means. When you have 10,000 buyers competing for a finite amount of physical gold, what happens to the price you get? It goes up. Basic economics. But it gets better. These aren't just mom-and-pop coin shops anymore. We're talking about national chains with standardized pricing, online dealers with instant quote systems, and even major retailers getting into the game. I'm talking about companies processing millions of dollars in gold transactions every single week. They have entire departments dedicated to buying back metal from customers. They have automated systems that give you a quote based on real-time spot prices. They have overnight shipping with full insurance. They have customer service teams that walk you through the entire process. And here's the kicker. They're paying more than spot price in some cases. Yeah, you heard that right. Depending on what you're selling, you might actually get a premium over the spot price of gold. How is that possible? Because the demand for physical metal right now is so intense that dealers are willing to pay extra to secure inventory. We're seeing premiums on certain coins and bars that would have been unthinkable 5 years ago. Let me give you a specific example. Right now, as I'm recording this, the spot price of gold is around $2,700 per ounce. If you walk into a reputable dealer with a 1-ounce American Gold Eagle, you're not getting $2,700. You're getting somewhere between $2,750 and $2,800, depending on the dealer and the condition of the coin. That's a premium. You're making money over spot just because of the form your gold is in. But let's say you don't want to drive to a dealer. You don't want to leave your house. Fine. Pull out your phone. There are apps now, actual mobile applications, where you can get an instant quote on your gold, schedule a pickup, and have a check in your hand within 48 hours. The entire process takes less time than selling a used car. And you're getting competitive rates because these companies know you can check their offer against 5 other dealers in about 30 seconds. I want you to understand something crucial here. The liquidity of physical gold right now is higher than it's been at any point in modern history. And it's not just because of technology. It's because of demand. The demand side of this equation is absolutely insane right now, and most people don't realize it because they're not paying attention to what's actually happening in the market. Central banks bought over 1,000 tons of gold last year. 1,000 tons. That's not a typo. These are institutions that have access to every financial instrument on the planet, and they're choosing to buy physical gold in quantities we haven't seen since the 1960s. Why? Because they know something. They understand that when the system gets stressed, when currencies start to wobble, when geopolitical tensions ramp up, physical gold is the only asset that doesn't depend on someone else's promise. And it's not just central banks. Look at what's happening with retail demand. The US Mint can't keep up with orders for gold eagles. They're rationing supply to dealers. The Royal Canadian Mint is running at full capacity. The Perth Mint in Australia has waiting lists. This isn't normal market behavior. This is what happens when people start to realize that the financial system might not be as stable as they thought. But here's where it gets really interesting. The people who are buying gold right now, they're not buying it to stick it in a safe and forget about it. They're buying it as a strategic asset that they can move when they need to. They understand that physical gold is both a long-term store of value and a liquid asset they can convert to cash faster than most people can sell their stocks. And that dual nature is what makes it so powerful. Let me tell you about a guy I know. We'll call him Robert. Robert's in his early 60s, retired from the tech industry with a decent nest egg. About 3 years ago, he started moving a portion of his portfolio into physical gold. Not gold stocks, not gold ETFs, physical metal. His friends thought he was crazy. They gave him all the usual arguments. You can't sell it. You'll get ripped off. It's not liquid. All the myths we're talking about. Fast forward to last year. Robert needed cash for an unexpected medical expense. Not a huge amount, maybe $30,000, but he needed it quickly. His stocks were down. His bonds weren't performing. But his gold? His gold had appreciated significantly, and more importantly, he could sell it immediately. He called 3 dealers, got quotes within minutes, chose the best one, and had the cash in his account within 2 days. The entire process was smoother than when he tried to sell his old car 6 months earlier. But here's what Robert told me that really stuck with me. He said the peace of mind wasn't just about having the gold. It was about knowing he could convert it to cash whenever he needed to. He wasn't locked in. He wasn't trapped. He had optionality. And in a world where everything feels uncertain, optionality is worth its weight in, well, gold. Now, I know what some of you are thinking. Okay, maybe it's easy to sell gold right now. But what about when everyone's trying to sell at the same time? What happens in a crisis? And that's actually the most important question, because that's when you really need liquidity. So let's talk about what happens to gold in a crisis. Go back to 2008. The financial system is melting down. Lehman Brothers collapses. Banks are failing. The stock market is in free fall. Everyone's panicking. And what happened to gold? It became more liquid, not less. Dealers were buying aggressively because they knew demand was about to explode. People who needed cash could sell their gold instantly, often at prices that were holding up better than almost any other asset class. Or look at March 2020. COVID hits. The world shuts down, markets are crashing. And gold? Gold dealers were overwhelmed with buyers. The premiums on physical metal went through the roof because everyone suddenly wanted to own something tangible. If you had gold to sell during that period, you could name your price. The liquidity didn't dry up, it intensified. This is the opposite of what happens with most assets in a crisis. When things get bad, stocks become hard to sell without taking massive losses. Real estate can sit on the market for months. Even bonds can become illiquid in a panic. But gold? Gold becomes more liquid because it's the thing everyone wants when they're scared. And here's something most people don't understand about the gold market. The physical market and the paper market are two completely different animals. When you hear about gold prices on the news, they're usually talking about futures contracts, ETFs, derivatives. That's the paper market. It's huge, it's liquid, but it's also vulnerable to manipulation and counterparty risk. The physical market is different. It's smaller, it's more stable, and it's backed by actual metal that exists in the real world. What we're seeing right now is a growing disconnect between these two markets. The paper price of gold is being held down by massive short positions and algorithmic trading. But the physical market? The physical market is tight. Really tight. Dealers are struggling to source metal. Premiums are elevated. Delivery times are extended. This is what happens when the real demand for physical gold exceeds the available supply. And this creates an opportunity that most people are missing. When you own physical gold right now, you're not just owning a commodity. You're owning something that's increasingly scarce in physical form, even while the paper market pretends there's plenty to go around. And when that disconnect becomes obvious to everyone, when people start demanding physical delivery instead of paper promises, That's when things get really interesting. Let me shift gears for a second because I want to talk about something that's relevant if you're thinking about gold as part of your retirement strategy. If you're sitting on $100,000 or more in retirement accounts, there's a way to get physical gold into those accounts without triggering taxes or penalties. I put together a free guide that explains exactly how gold IRAs work, what the rules are, and how to set one up properly. It's in the description below. No sales pitch, just information. Worth checking out if that's something you're considering for your situation. All right, back to the liquidity question, because there's another angle here that's crucial. The ease of selling gold isn't just about having buyers. It's about having transparent pricing. And this is where the market has changed dramatically in the last decade. 20 years ago, if you wanted to sell gold, you had no idea if you were getting a fair price. You'd go to a dealer, they'd make you an offer, and you'd either take it or leave it. There was no way to verify if they were being honest. No way to compare offers. No transparency at all. It was a black box, and that's why people got ripped off. Today you can pull up the spot price of gold on your phone in real time. You can see what dealers are paying. You can compare offers from multiple buyers instantly. You can read reviews from other sellers. The entire market has been forced into transparency by technology, and that's changed everything. A dealer can't lowball you anymore because you'll just go to their competitor who's offering a better price. And the competition is fierce. These dealers are fighting for market share in an industry that's growing rapidly. They know that if they treat you badly, you'll post a review online and cost them future business. So they're incentivized to give you fair prices and good service. The market has essentially policed itself through transparency and competition. But let's talk about the different forms of gold and how they affect liquidity, because this is important. Not all gold is created equal when it comes to selling. If you own government-minted coins like American Gold Eagles, Canadian Maple Leafs, or South African Krugerrands, you're holding the most liquid form of physical gold on the planet. These coins are recognized worldwide. They have standardized weights and purities, and dealers will buy them instantly at competitive prices. Bars from recognized refiners like Pamp Suisse, Credit Suisse, or the Royal Canadian Mint are also highly liquid. They come with assay certificates. They're easy to verify, and dealers trust them. You might get slightly lower premiums than coins, but you'll have no trouble selling them. Where you can run into issues is with jewelry, scrap gold, or bars from unknown refiners. These require more verification, and dealers will typically pay based on melt value rather than numismatic or collectible value. But even then, you can still sell them. It's just a different process and a different price point. The key is understanding what you're buying in the first place. If liquidity is important to you, stick with recognized coins and bars. Pay a little more upfront for the premium, and you'll get it back when you sell. It's like buying a Honda versus some obscure car brand. The Honda might cost more, but you'll have an easier time selling it later. Now let's address the elephant in the room. Taxes. Because I know some of you are thinking, okay, maybe I can sell my gold easily, but won't I get destroyed on taxes? And the answer is, it depends, but it's probably not as bad as you think. Physical gold is classified as a collectible by the IRS, which means long-term capital gains are taxed at a maximum rate of 28%. That's higher than the long-term capital gains rate on stocks, which tops out at 20%. But here's the thing. You only pay taxes on the gains, not the entire sale. If you bought gold at $1,800 an ounce and you sell it at $2,700, you're only paying taxes on that $900 gain. And there are strategies to minimize the tax impact. You can offset gains with losses from other investments. You can time your sales to spread gains across multiple tax years. You can hold gold in a retirement account where gains aren't taxed until withdrawal. The point is, taxes are a factor, but they're not a deal breaker. And they certainly don't make gold illiquid. Let me tell you another story. There's a woman I know. We'll call her Patricia. Patricia inherited a substantial amount of gold coins from her father about 10 years ago. She didn't know much about gold, didn't really want to deal with it, but she held on to it because she didn't know what else to do. Last year, she decided to sell about half of her holdings to fund a business venture. She was nervous. She'd heard all the horror stories about getting ripped off, so she did her research. She got quotes from 5 different dealers. She checked their reviews. She verified the spot price. And you know what happened? Every single dealer offered her within $50 of each other per ounce. The market was so competitive and transparent that there was barely any variation in the offers. She ended up selling through an online dealer who sent her a prepaid, insured shipping kit. She sent the coins, they verified them, and she had a wire transfer in her account within 24 hours. The entire experience was so smooth that she told me she felt stupid for being nervous in the first place. And that's the reality of selling gold in 2025. It's not scary. It's not complicated. It's not a trap. It's just a transaction. But here's what I really want you to understand. The ease of selling gold isn't just a nice feature. It's a fundamental characteristic that makes gold a superior asset in uncertain times. When you own stocks, you're dependent on the market being open, on there being buyers, on the price not gapping down before you can execute your trade. When you own real estate, you're dependent on finding a buyer, going through escrow, dealing with inspections and financing. These processes take time, and time is something you don't have in a crisis. Gold is different. Gold can be converted to cash in hours if you need it to be. And that speed, that liquidity, that's what gives you options when everyone else is stuck. It's what allows you to take advantage of opportunities when they appear. It's what lets you sleep at night knowing that if something goes wrong, you have a way out. And we're living in a time when having a way out is more important than ever. Look at what's happening in the world right now. We've got inflation that's still elevated despite what the official numbers say. We've got geopolitical tensions that are escalating. We've got a banking system that's more fragile than most people realize. We've got governments running deficits that are completely unsustainable. We've got central banks that are trapped between fighting inflation and preventing a recession. This is not a stable environment. This is not a time when you want all your wealth tied up in assets that are hard to sell or dependent on the system functioning perfectly. This is a time when you want optionality. You want flexibility. You want the ability to move quickly if you need to. And that's what physical gold gives you. It's not just a hedge against inflation or a store of value, though it's both of those things. It's a liquid asset that you can convert to cash faster than most people can sell their stocks, and you can do it without depending on a functioning financial system. Think about what happened in Cyprus in 2013. The banks closed. People couldn't access their money. ATMs ran dry. But if you had physical gold, you could still transact. You could still protect your wealth. You could still function while everyone else was frozen. That's the power of physical assets in a crisis. Or look at what's happening in countries with currency crises right now. In places like Argentina or Turkey or Lebanon, people who own physical gold can preserve their purchasing power while everyone else watches their savings evaporate. They can sell their gold locally for local currency, or they can hold it and wait for the crisis to pass. They have options. Everyone else is stuck. Now, I'm not saying the United States is going to turn into Argentina tomorrow, but I am saying that the conditions that lead to currency crises, the massive debt, the money printing, the loss of confidence, those conditions are present in ways they haven't been in decades. And if you wait until the crisis is obvious to everyone, it'll be too late to position yourself properly. The time to buy gold is when everything seems fine. The time to understand how to sell it is before you need to. Because once you know how liquid physical gold really is, once you understand that you can convert it to cash as easily as selling stocks, the entire equation changes. It's no longer a question of whether you can afford to own gold. It's a question of whether you can afford not to. Let me give you some practical advice if you're thinking about buying physical gold. First, buy from reputable dealers. Stick with established companies that have been around for years and have good reviews. Don't chase the lowest price if it means dealing with a sketchy operation. The few dollars you save up front aren't worth the headache later. Second, buy recognizable products. American Gold Eagles, Canadian Maple Leafs, bars from major refiners. These are the most liquid forms of gold, and they'll be the easiest to sell when the time comes. Don't get cute with obscure coins or bars from unknown mints. Third, keep your documentation. Save your receipts, your certificates of authenticity, anything that proves what you bought and when you bought it. This makes selling easier and helps with taxes. Fourth, understand the market before you sell. Check the spot price. Get multiple quotes. Don't rush into a sale unless you have to. The market is competitive enough that you can afford to shop around. And fifth, don't overthink it. Selling gold is not complicated. It's not scary. It's not a trap. It's a straightforward transaction that thousands of people do every single day without any problems. The myth that physical gold is hard to sell is just that, a myth. It's a story from a different era that's been passed down through generations, and it's preventing people from protecting their wealth in one of the most effective ways possible. The reality is that physical gold in 2025 is more liquid than it's ever been, and it's only going to become more liquid as more people wake up to what's happening in the financial system. We're at a point in history where the old rules don't apply anymore. The idea that you can just park your money in a savings account or a 401k and everything will be fine, that's over. The idea that the government will protect your purchasing power, that's over. The idea that the financial system is stable and trustworthy, that's over. We're in a new paradigm, and the people who understand that are positioning themselves accordingly. Physical gold isn't a relic of the past. It's not something your grandfather bought because he didn't understand modern finance. It's a strategic asset that provides liquidity, optionality, and protection in a world that's becoming increasingly unstable. And the fact that you can sell it as easily as you can sell stocks, that's not a minor detail. That's a game changer. So if you've been sitting on the fence about buying physical gold because you're worried about liquidity, you can stop worrying. The market has evolved. The infrastructure is there. The buyers are there. The transparency is there. Everything you need to buy, hold, and sell physical gold with confidence exists right now. The question isn't whether you can sell your gold when you need to. The question is whether you'll have any when the time comes to sell it. Because the people who understand what's happening, they're not waiting. They're buying now, while prices are still reasonable and supply is still available. They're positioning themselves for what's coming, and they're doing it with the confidence that comes from knowing they can move in and out of their positions whenever they need to. Don't let an outdated myth prevent you from protecting your wealth. Don't let fear of the unknown keep you from taking action. The gold market in 2025 is transparent, competitive, and liquid. You can verify everything I've told you with a few minutes of research. Check the dealers, look at the reviews, get some quotes. See for yourself how easy it is. And when you do, when you realize that selling physical gold is actually easier than selling most other assets, you'll understand why smart money is moving into precious metals right now. You'll understand why central banks are buying at record levels. You'll understand why premiums are elevated and supply is tight. Because the people who know, they're not worried about selling their gold. They're worried about not having enough of it.